Hello, welcome to IGTV. I'm Angeline Ong, and this is your special look at the coming week starting the 15th of May 2023. And in just a moment, we'll have IG's Chief Market Analyst, Chris Beecham, with us. First, let's get you across all of the potential headlines that are going to come from the economic diary. And there is a lot to digest. First, we start in Japan, which is out with its producer price index. Industrial production numbers out of the Eurozone as well could produce some in and out points if you're looking at the euro dollar. And we've also got the manufacturing index out of the US. Moving along on Tuesday, we've got further numbers out, this time from China, retail sales numbers there and industrial production as well. And from the UK, the unemployment rate. Quite a key one to watch, especially after the Bank of England, as expected, raised interest rates. But also, there's a glimmer of hope now that actually the UK economy might be starting to see signs of a very, very early recovery. Eurozone numbers, first quarter GDP. Now, this is the second estimate, it has to be said. The key one to watch out for on Tuesday is the ZEW economic sentiment. That's the key one out of Europe. And retail sales, of course, from the US and industrial production as well. Then during the midweek point, we've got a few notable events. The growth rate from Japan, this is the first quarter. The house price index from China and housing starts and building permits from the US alongside EIA crude oil inventories. Later on in the week, look out for trade balance figures out of Japan, the unemployment rate from Australia and initial jobless claims from the US, along with the manufacturing index and also existing home sales as well. And then we end the week with the GfK consumer confidence figure out of here. Now, inflation has been uncomfortably high. Expectations now are that the Bank of England might only get to the peak of its rate hiking cycle sometime in August. We've also got the consumer price index out of Japan and the producer price numbers from Germany, along with the Baker Hughes oil rig count. So a lot to digest in the coming week. Chris is back with us. How much is this going to play into the emerging concerns that perhaps the debt ceiling conundrum, which is annual in the US, might make it slightly more exciting for investors going ahead?
I think it's the big risk for volatility. It comes almost well timed, actually. Earnings season is beginning to run down. We've had a lot of the big names report already, so that's taken the interest away from that. We've not got a central bank, a major central bank, so not the Fed, doesn't meet until mid-June now. So there's scope, if you like, for the debt ceiling to dominate markets, particularly, of course, ahead of that 1st of June deadline. Now, it's one of those things where ultimately, it's likely they will raise the debt ceiling and everything carries on as before. But the risk is, of course, that we get the theatre, the drama that prompts volatility in markets. So that's why it will increasingly feature in market news over the next 2 weeks. I suppose we're looking at markets to trade as the week gets underway. And as you noted, it's a bit of a second tier week in terms of data, although the ZEW index in the Eurozone is always one to watch. If we look at euro dollar, and it's all going to be about the dollar if the debt ceiling crisis really takes off, and euro dollar is the biggest component of the dollar basket, so let's stick with that. It's obviously had a good run since March, but it has begun to turn lower over the past week. We now find ourselves back below 109 for the first time since early April, but the uptrend is still firmly intact. It's just a question of how much further this runs, obviously. And as I was saying in charting during the week, it's strange to see the dollar strengthen when the debt ceiling crisis is in the news, but that's obviously the market's natural reaction. So we're seeing people buying the dollar at the moment, selling the euro, and just wondering where we go from here. So it's a broader uptrend, but we're looking at the biggest perhaps challenge pullback, if you like, in euro dollar we've had in about a couple of months, which is to be expected. I think it's certainly one to watch, and you can expect any signs of resolution on the debt ceiling, or progress, if you like, in negotiation, to actually be dollar negative, most likely, and that could see euro dollar revive.
Thanks, Chris. Don't go away yet. We'll come back to you on the corporate news. The debt ceiling may be in further focus next week when Yellen meets with the US banks sometime in the coming week. On the corporate diary, it's just as busy. We've got numbers out of Vodafone, Vodafone's been in the news recently because it's deepening its strategic relationship with the CEO of its biggest shareholder, Emirates Telecom's group, Etisalat. Vodafone out with full-year earnings. We also have Imperial Brands, Greggs, the company behind the vegan sausage roll, out with the trading statement, and first quarter numbers from Home Depot as well. Midweek, look out for British Land, Siemens, Munich Re, and Cisco Systems. And on Thursday, we end with numbers from easyJet. Perhaps the revenge travel will also lift its earnings there. BT Group out with full year along with IDS. And Walmart's first quarter and Burberry as well out with full year earnings. Chris, the luxury space has been really interesting, especially Tapestry, saying that its annual profit was strong because demand was coming back in China. Are we likely to see the same with Burberry?
This is the key story, isn't it? And Burberry, always the focus in China is there, and it's expected that we see a revival in demand for that. China was about 40% of revenue before COVID with Burberry, so it's a key player. It's expected that's expected to improve. The figure at the moment is about 25%, so plenty of room for upside there, really, given the hopes the Chinese economy is rebounding, particularly as it's now fully reopened. It's of course been a stellar year, a stellar sort of 6 months for Burberry, outperforming the market, began to rally back in May and hasn't looked back since then. So it's a great trend here. It's one of those ones that you really love to see if you're looking at it certainly from a trading perspective, but looking for sort of swing trades. You've got a decent series of higher highs and higher lows. The last one was back in March when we dropped back against the 100-day moving average. It seems to be such a big magnet for a lot of markets during March, and then it's rebounded. Yes, it's pulled back a bit ahead of earnings, as you might expect, and clearly pricing in a lot of good news compared to where we were just 6 months ago. But there's an uptrend that is well worth keeping an eye on, and I think it's impressive that luxury stocks have returned to form so quickly, perhaps recession-proof to a degree, you could argue. Similarly, if you look at indices, CAC 40 has a lot of luxury in it compared to other European markets, which is why it's doing so much better versus some of the other indices in Europe. But certainly Burberry earning, I think, the one to watch this week. And as I said, those China numbers for Burberry and the forecast for the rest of the year, very much key in determining where the share price goes from here.
Thanks, Chris. And certainly we're seeing that trend mirrored by Kering and many of the other peers. Burberry shares up 25% year to date. And that's the latest from me. Hope you have a good weekend. Until we see you next week, do make sure to tune in to all our usual content. We've got charting, the trend, and also our India series online. I'm Angeline Ong, and this is IGTV.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.